presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hey, Robert, how you doing, man?
Yes, and thank you for taking my call. I wanted to let you know that I've been a subscriber for a couple of years, just different members of your team, and I really enjoy it. But really the reason I'm calling is to express my sincerest gratitude for you providing that information yesterday on the small business grant. I'm a small business owner and primary breadwinner for my family, and if I can get that money, it's going to really mean a lot to my family. So
that's awesome.
Thank you for taking the time to do that.
No, well, listen, man, we appreciate you growling a problem with us.
Now, Tom O'Brien.
What's going on, everyone? This is Jacob Shoup. You're watching the Tom O'Brien Show. I hope you all had a phenomenal weekend. Let's take a look at what we got going on right now in the market. We got the composite off about 0.65% at 19,730. The Dow Jones Industrial off about 0.35% right now. You have the SPY off about 0.52% at 604.67. You get that dollar getting a little bit lower, right? We're at 106.15, a little bit of bounce up. We cracked real low around 105.41 last session, but we got a little bounce going on, still lower than that 108.07. Let's take a look right now. We have crude oil up about 1.58%, trading at 68.26. Now, of course, you had the Assad regime fall this weekend in Syria. I'm not sure how much that is really contributing right now to the increase, at least in the price of oil. It really seems like there is a mass amount of production going on, and nothing's going to really squeeze that supply regardless. America is just producing so much. You have the gold contract coming up about 0.84%, so getting a little bit higher off that kind of low that we had in the interim, right? Around November 13th, let's see, around 2,543, bounced off it, pulled back again on November 25th, and we're slowly creeping back up really to that level of resistance right there. So we'll see what happens with gold. You have some of the stocks running off today as well. Let's see, the GDX of about 3.65%, fantastic. You have NGD, that is New Gold Inc., that's all up about 3.37%. A lot of stuff really today open higher, kind of getting a little bit lower throughout the day. That's fine. You get so much exuberance in the market, you get people wanting to get out and take some profits. Okay volume for the day as well, pushing those kind of highs. One of the stocks that is not, I think Newmont is up today a little bit, up about 1.79%. But this is just in such a tough spot. And it's hard to, I think, kind of warrant getting into the thing. Let's see here. You have some big news with them where they're just getting rid of some hiring managers, which I think is going to be fantastic. Yeah, so they lay off nearly a dozen managers, merging businesses. They are doing a major corporate restructuring. And it kind of makes sense if you look at what the stock has been doing. You're getting so much attraction in gold and nothing has really happened for it beyond missing earnings terribly. I mean, it's just bad management right now with the stock. I think on the long term that this is a positive. Obviously, the market is reacting okay to it, up about 1.81%. We're kind of getting eclipsed by some of these other mining stocks as well. Let's take a look. We got Lucid up 10% right now, 11.3%. It is battling. Whew. Let's take a look at Rivian as well, man. 12% nearly, up 11.19%. You had a big target increase from a large firm saying that they see Rivian at $18. Love to see kind of the reasoning behind that because I still think they have some big problems. I think going forward too, I mean, it's almost fundamental, right? And they're having issues getting profitable. That plant that they're trying to build has been stopped so many times. They did get the $6.6 billion from the Biden administration, which is great. But this new administration coming in seems to not really be that keen on giving EV makers any more money to try to make this dream work in the short term. Regardless, the news is the news. They have an $18 price target for it, and this is pushing that stock up 11.27% today. Let's take a look. I want to talk a little bit about Nebius, and I'm not sure what happened on the earnings. I think it must be because they got recently re-added back to the NASDAQ, that whatever NASDAQ has for their earning calendars is a little bit off. These guys are off 10.96% today at $32.79, rallied up to $37 over the weekend. Of course, I was talking about how they had earnings. And again, that was just an error from the NASDAQ earnings calendar. I still think this is attractive at this level in a major way, okay? If you weren't, if you didn't join us on Friday, one of the things I was talking about is that one of their major kind of competitors or people like inside the same kind of industry, these guys basically develop GPU clusters, buying from NVIDIA. CoreWeave is basically the only other group really doing that, right? And they're about double the revenue of Nebius, and they trade at 35 billion market cap. So I mean, that's a 6 times multiple. If you take roughly half, you should be getting around 17.5 billion, right, market cap for Nebius. Additionally, their management, which I think is super important to look at when you're kind of talking about long-term investing on some of these stocks, management is amazing for Nebius, right? So right now, I think coming down today, 10.95%. Of course, they had a massive rally up over the past few weeks. You're getting some kind of analyst attention on it. You're hovering really around those like upper 18s, low 90s. I think the high you had right there was 24.83. And we get this massive push because Citron comes out and kind of says something similar, right? So I even like it at this level, still at 32.65. The revenue's increasing. They have $2 billion in cash, in nearly zero debt. I mean, you're talking about like nearly half of the market cap they have in cash with zero debt. I like the way that the stock is positioned. I think that people just haven't really heard about it yet, and I think once analysts really start hearing about it and looking at the financial situation of Nebius, that this really has a potential to run, I mean, again, talking like if you want to be half of what CoreWeave is, and people think CoreWeave is valued properly at 35 billion, they're only making double the revenue of Nebius, then we should maybe be trading at 17.5 million market cap. So we'll see what happens. Excuse me, I'm saying million, I mean billion, but you get what I'm saying, right? So pretty good, somewhat interesting volume today, definitely coming down, right? You had a massive push up in the beginning of the morning, huge bar hovering right now around 32.74, which is just about the low of, right above the low of the day. Let's take a look. We have Oracle coming out today with earnings. What else? We have GameStop, which we're going to talk about. Planet Labs, which was a huge play by Reddit, right? And these guys are getting smoked on it. Again, I was speaking about these kind of satellite stocks, and it's very tough. One of the things I would say about Planet Labs, which is interesting, is they got a 7-figure kind of endowment, right, to essentially analyze forests from space in hopes of kind of eliminating the impacts of carbon on the environment. That is almost one of the better things that could happen for any of these kind of satellite stocks, but these things are getting really memed. So if you're looking at getting this stuff like, GSAT, not GMAT, GSAT, this is off 2.94% today. Again, these guys get memed. ASTS even signed a deal today, up 6.64% right now, 4.74. But you can see, you get a lot of bag holders in these areas. So, approach with care when you're looking at some of these satellite stocks. Folks, you stay right there. We'll be right back with Steve Rhodes, author of Mastering Probability, when we get back from the break.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Welcome back, everyone. This is Jacob Shoup. You're watching the Tom O'Brien Show. I wanted you to take a look at my screen over here. I am on TFNN.com, and the reason I am on TFNN.com is we're going to go to the newsletters tab right here. Now, every Monday, we are joined by Steve Rhodes. Steve Rhodes is the host of the Trader's Edge Show right here on TFNN at 11 a.m. Eastern Time, and he is also the author of Mastering Probability. Again, you've heard me speak about Mastering Probability quite a bit. I love this newsletter. It gets you a really good idea of what's going to happen Mondays. And then, of course, he has publications throughout the entire week and updates when it is warranted. It is a fantastic newsletter. It is thorough. Strongly recommend checking it out. Additionally, if you've never checked out Mastering Probability before, we have a 30-day money-back guarantee for all first-time subscriptions, so you can check out the newsletter risk-free. Again, strongly recommend checking this out. Steve, how are you doing?
I'm doing great, Jacob. Yourself this afternoon?
I'm doing well. We're getting back into the shake of the work week, you know?
Sort of. 15 days till Christmas.
I know. But I can't think about that, right? Because I have to sit in, we have to focus. We're running, got a lot of stuff going on here at TFNN. And so if I start thinking that, the holidays come, what happens?
I hear you. Just reality kind of sets in.
That's right.
2 weeks. Better start my shopping now.
That's right.
So, one of the questions that I've been receiving periodically over the last several weeks has been, are the markets getting ready to form a major top?
Yes.
And really the insinuation is, are we getting ready for a bear market to begin? Yep. So I thought that what you and I could do is that I could share with you what I've observed in trying to answer that question. And it's really this: when markets make major tops, the kind that can lead to bear markets, the daily, the weekly, and the monthly charts each have very defined topping patterns. Those folks that watch the Trader's Edge show know that most times during that hour between 11 and 12, somebody's asking to analyze a chart. Maybe it's maybe it's Apple, whatever it might be. And I'm always taking a look at the daily, the weekly, and the monthly time frame. Some people might wonder, well, why does Stevie always have those charts up there? And the reason is because what I'm really trying to identify or understand are major tops out there. And so now that also means when I show you these patterns out here, that doesn't mean that every time the pattern is present, that it leads to a bear market. But when those patterns are present, that's always been a signature of a bear market. Does that make any sense?
It does, absolutely.
Perfect. Okay, good, because I don't want to confuse people right off the bat. So why don't we begin with the 1929 stock market crash. Now, I don't have time to show everyone every single bear market that's transpired since then. But what I can share with everybody is I have gone back to the Dow charts back to 1896, and I have identified and analyzed every single when I say a bear market, more than a 20% move to the downside. And these chart patterns have been present. Here's the daily Dow charts. This is the daily, weekly, and monthly Dow charts, Jacob, that take us back into 1929. And if we take a look at the daily time frame, one of the patterns that I refer to is the Rhodes Momentum Indicator. It's RMI for the abbreviation. It formed one of those RMI tops on September 12, 1929. And it did it with a bear sash candle. This is a 5-step pattern that I teach subscribers out there. If you've not subscribed, it is really worth your subscription for at least 29, 30 days because you've got a free trial out there.
Absolutely.
And I will teach you this pattern. The weekly time frame for the Dow also had a Rhodes Momentum Indicator top, and that ended, and that was for the weekend, September 6th. And then finally, when we got to the end of September, we had another confirmation of a Rhodes Momentum Indicator top for the monthly time frame. So all three of these charts had that Rhodes Momentum Indicator. What's the Rhodes Momentum Indicator out there? As I said, it's a 5-step process. We use Japanese candlesticks. We use time. We use a relative strength indicator. It's just simply worthwhile for folks who subscribe to Mastering Probability. I'll show you what it's there. You can manually do this for a handful of instruments that you track. What I've got on my charts are all automated tools because I know what it is to look for and pick up. If we go to the 87 crash, I've just picked out just a few major tops that most people are familiar with. If we go to the 87 crash out here, what we will see is that the daily Dow, and I'm just using the Dow charts out here for the time being, it formed a Rhodes Momentum Indicator top on September 1st, 1987. On October 5th, the daily Dow, and so if you're over here on the left-hand chart, it's really up in this little cluster where my cursor arrow is at. To give you a second time that there was a top, and it was a lower high, it was a TD9 count top that formed on October 5th for that daily time frame. The weekly time frame, it formed a Rhodes Momentum Indicator top on August 28, 1987, and the monthly formed a TD9 count top in September, right up here where it's got this TD9 count in September of 1987. So there was plenty of evidence, plenty of warning shots out there to be careful, to be cautious. But those patterns were present. And what's also kind of interesting here, Jacob, and I didn't realize this till I pulled it up and started working on this yesterday, was that the 87 crash out there occurred on October 19th. That's this long, wide-ranging red bar out there. If you take a look at the bar just before that, what number do you see?
Right
there,
number
9. The TD9 count pattern, which is another pattern that I teach to folks out there, identified the bottom. The top or bottom of pattern, in this case here we're looking at a bottom out here, the low needs to occur on bars 8, 9 to the bar following bar number 9. That was a major bottom, a major low out there. So again, another tool that I teach. Somebody might say, what's a TD9 count pattern out here? And the best way for me just to kind of describe it, I guess metaphorically, is picture a 100-yard dash. Picture yourself doing a 100-yard dash, and you're going to give your all. That's just 100 yards. What are the chances after you're done running you're going to fall on the ground out there? Because you've used all your energy.
Right.
In fact, if you go back and take a look at the 1987 crash out there, used all that energy, yet bottomed on that day. Again, that doesn't mean that every single Rhodes Momentum Indicator, top or bottom, is doesn't fail. And the same thing with the TD9 counts. But what it does do, it gives us an edge. It means that we can take these charts, we can take a look at these bars, and we can identify topping and bottom signals out there. We take a look at the 2000 top. January 18, 2000, Dow forms a Rhodes Momentum Indicator top. The weekly, end of January 21st, 2000, also Rhodes Momentum Indicator top out there. And then the month of September, also confirming a Rhodes Momentum Indicator top. Again, we've had all these patterns. They're present They are present at every bear market. They're also present at tops. When these form, that does not mean we're going to have a bear market. But when all three show up, daily, weekly, and monthly, I'm telling you that the hair on the back of your neck is just simply got to stand up out there.
Sure.
Just knowing for that, especially on the monthly time frame. And because on the monthly time frame, there's fewer of those signals that are out there. So you really pay attention. If we take a look at the 2007 top, the daily Dow formed a Rhodes Momentum Indicator signal, followed by a weekly Rhodes Momentum Indicator top on the 19th. And the month of October also completed a TD9 count as well as a Rhodes Momentum Indicator top. Again, that was the 2007. If I went back to the 2020 COVID crash, It also had those patterns present. Take a look at the Nikkei 225. So it doesn't just apply just to the Dow. If we go back to the major top that formed in 1990 in the Nikkei, and you take a look back here, it was a Rhodes Momentum Indicator top on the daily, a TD9 count top on the weekly, Rhodes Momentum Indicator top on the monthly. It took decades. We just got back there this year, back to those highs in 2020 and 2024. I believe it was maybe the first quarter of this year when price finally got all the way. Gold. In 2011, we had a huge run-up in gold. Well, guess what ended that? On a daily time frame, a Rhodes Momentum Indicator top. On a weekly, a TD9 count TD9 count top. And on the monthly chart, it was a Rhodes Momentum Indicator top. These patterns, when they are present for all three time frames, folks, it really wants to make you be very, very cautious. So what we can do, if you'd like, is when we come back from this break, we could go take a look at where are we at right now with the Dow, the S&P, the NASDAQ 100, maybe a few other things out there.
Absolutely. Steve, please stay right there. Folks, we'll be right back with Steve Rhodes right after this break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everyone. This is Jacob Shoup. You're watching the Tom O'Brien Show. We are joined right now by the host of the Trader's Edge Show on 11 a.m. Eastern Time right here on TFNN and the author of the Mastering Probability newsletter, Steve Rhodes. Steve, before we went to the break, we were talking about movement up in the Dows as a potential topping pattern, looking at the daily, the weekly, the monthlies. I really loved the analogy to basically a physical system with these stocks, right, or with these indices in particular here. But it really works like that, right? I mean, you get massive moves to the upside. Let's say you're looking at just a standard standalone equity, right? And you get unbelievable volume, just keeps pushing up and pushing up and pushing up. At some certain point that system gets, there's not enough buyers, right? Same thing when you keep selling and selling and selling and selling. There just ends up not being any sellers left, right? So I really like that perspective. I'm not saying that's, I'm obviously putting kind of my thought on that a little bit as well, so not
but it's a good thought.
For you.
But it's a good thought, because what you're talking about there really, or how I would interpret what you said, it's really about emotion. The stock market is really about emotion, right? Whether it's emotion to the upside, emotion to the downside, emotion is nothing more than energy. So you're right. I mean, it really is all about energy. And like we use as an analogy for a TD9 count, picture yourself doing a 100-yard dash. Yep. I'm not a young pup anymore, and I can only imagine running that hard, as hard as I possibly can. When I'm done, I'm probably not going to be standing.
That's right.
It wouldn't matter whether it was a marathon and you conserved your energy that way or whatever it is. It's all about, the use of energy. So how do we identify when that use of energy is done, when that emotion is done, either to the upside or to the downside? And in essence, that's really what the Rhodes Momentum Indicator tool is doing, the TD9 count tool is doing. There's another tool. So since you brought that up, there's another tool that I use that I teach, I refer to as the oscillator unchanged line. And on my charts, you'll see it as either a green or a red squiggly line. If we take a look at 2024, and the reason that I developed that tool, the tool originally came from Sherman McClellan. He's the first one I think that may have identified it. The reason that I used that tool was I wanted to know when a retracement was just a retracement. Right? Let's say you're trading something, all of a sudden you start seeing it move lower. Isn't the question, was that the end? Was that the top? Is that the beginning of the end out there? And so I wanted to create a tool that helped me to objectively, right? Because emotion is all inside this market. If you can't answer things objectively, you can easily really miss what the markets are communicating to us. In fact, when I do a show each day, I'm really just sharing with you, communicating with you what the chart is saying. I've really tried to, I have very fixed levels of tools that identify support and resistance out there. So that's not an objective thing for me to share with you. If we look at the Dow here, the very right-hand panel chart, and you can see where 2024 started out there, look at that green oscillator and change line. Any pullbacks during the year found support at that level. As a long-term trader for 2024, you never received a signal that said maybe you need to lighten up in your loafers out there with regard to your long positions inside of the Dow. And that's what makes that such a cool tool. If I take a look at some others, what wasn't what I intended to do here with this set of charts. We can go switch over and take a look at anything else. But here, with regard to the Dow itself only has a Rhodes Momentum Indicator top for its daily time frame. It's triggered on the weekly time frame, but it requires a bearish reversal candle. That's how the market, Tom likes to say, squawks, walks, and talks to us. That's how the market communicates to us, and it does so with those Japanese candlesticks. So that doesn't mean that price might not pull back to 44,290, but I don't have that top. You can see the lines are triggered on the Dow for the monthly time frame, but we negated the Rhodes Momentum Indicator top last 2 months ago. Was this bearish shooting star. So another bearish reversal candle would have to form to suggest that, okay, maybe we are now entering a period if we had all three of those with Rhodes Momentum Indicator signals up there. There's something else that I have identified and developed, and I call it right now the dance steps. I'm trying to really find a different name for it. That just doesn't stick with me, out there. Sure. But it truly is how the market dances. So, for example, today now this is the Dow, but if we were to take a look at the S&P, the ES Mini, today's only day one to the downside.
Yes.
If we take a look at these dance steps out here and we go down to the bottom left, this is the Dow Jones, and that the black digits are consecutive moves higher. So we're talking about higher closes, and the red digits, consecutive moves lower. In bull markets, what you will see is those moves lower last 1 to 4 sessions out there. If we take a look at back here, looks like in middle of November out there, we can see that we had a 4-day move to the downside. Boom, back up to the upside. If you look at the weekly time frame chart and you come back to the bottom and just simply of August out here, that's as far back as I'm going on this visual chart, we see 1 2-week pullback. Last week was 1 week pullback. Maybe this week is going to also be a 1 week pullback. Right. This is just normal price behavior and movement. It just doesn't go up. It just doesn't go down. And it's really helpful to understand those dance steps. Any questions about that? And if not, I can show like the S&P and
I'm following along right with you. And if anyone has any questions, just message me in the den. I will relay them to Steve. Yeah.
Perfect. Okay, so if we take a look at the S&P 500, what we'll see on the S&P 500 is no Rhodes momentum indicator signal. There is a TD9 count top pattern that is present. So we want to be careful of that. That's from 3 days ago. If people go back and take a look at that high, note that on your pad of paper. If price closes above that pattern gets negated. The number is 6094.55. I put it right in front of my face. But I'm looking at the charts, not actually the language that is up there. That's for everybody else to follow on. In the S&P 500, you can see on a weekly basis, we're still above that support level of that oscillator and change line. There's no confirmed Rhodes momentum indicator top. And the same is true for the monthly time frame. So if somebody was asking me, has the S&P 500, has it formed a major type of bear market top? Well, the answer is no, unless this time is different. But as I said, I've gone back historically through every single bear market in the Dow, and they all have this same pattern where you've got a well-defined top out there. Now, maybe people can add their other topping signals. That I don't know. But the ones that I use, for example, the NDX 100 on Friday, the NDX 100 negated a TD9 count top for its daily time frame. It negated a weekly Rhodes momentum indicator top for its weekly time frame. And it negated the month of November its TD9 count top out there as well. But even though we're pulling back today, the message of the NDX 100 is it wants to head higher and much, much higher out there. So that's what its messages are. Now, the important thing here, and I want everybody, to really understand, our role as interpreter of what the charts are communicating to us is to come back to it at each moment in time, each future moment in time, to see if there's new information. Sometimes the chart patterns change out there. But what I can say unequivocally is that there's no bear market tops for the Dow, the S&P 500, the NASDAQ 100, the types that are present before every single bear market. That doesn't mean the market might not pull back or what have you. It just means we don't have the signals out there that we're ready for a bear market to start.
Fantastic. Steve, that was fantastic as always. Guys, I really recommend checking out Mastering Probability newsletter. So much more from where that came from. And Steve, we'll see you tomorrow morning, I guess, 11 a.m. Eastern time.
Thanks, Jacob. Have a great day.
Thank you, Steve. Take care. Folks, stay right there. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everyone. This is Jacob Shoup. You're watching the Tom O'Brien Show. I was just joined by Steve Rhodes. Steve Rhodes is the author of Mastering Probability and the host of the Trader's Edge live stream right here on TFNN. That's at 11 a.m. Eastern Time. Strongly recommend checking it out. And again, it was nice to get a little bit of insight really into how he kind of looks at things like that. Obviously, you can get that on the show, but it's always nice when these traders kind of break down what they look for. Again, you know, kind of to reiterate, and I do recommend going back after the end of the program today. Our producer's always hard at work getting these clips up for you guys. We're going to have that entire interview on our YouTube channel at Tiger Financial News Network. But the idea that not necessarily a topping pattern going on right now in the market. And, you know, it's interesting, right? Because when I see these equities move up so large, right? You start getting capped to some certain extent, right? Then you see Bitcoin coming in and all the other, you know, bad coins getting pumped. But it's almost like the rest of the world, you know, is not doing super well, and America just operates kind of as this place to put money when nothing else is. So, you know, we could pump this thing and continue to pump it pretty heavily. Interesting to note, we have the composite off about 0.69% right now at 19,722. The Dow Jones Industrial off about 0.45% at 44,441. You have that DXY trading at 106.18. Crude oil coming back down a little bit, still up 1.44% for the session at 68.18. You had the gold contract up about 0.77%, 2,680. Let's talk a little bit about Palantir, right? Because this kind of moves in as well to another stock that is blowing up today. Palantir off about 5.58% at $72. This has been such an amazing, amazing run. I'm almost upset that I sold. I mean, listen, the thing is like you lock profits when you can get them. I had a great profit in Palantir. I don't regret that. But then when you see stuff go up to $80, right, which is $30 above where I sold the thing, you're like, oh man. But coming back down a little bit today, you have some actually pretty good news for them. And I wonder, you know, partly if it was the contract valuation. It seems like it's going to be a 1-year delivery for it. I wonder if that kind of influenced this movement down. And this is some pretty good volume too, this big bar. Again, a lot of things got just pushed up this morning. We had a high today of 80.91, which I'm pretty sure is the all-time high for the stock. It is, for sure. So off about 5.48% today. So the U.S. SOCOM has expanded the contract with Palantir to deliver, quote, advanced AI and mission manager capabilities. Okay, so today announced an expansion of its contract with U.S. SOCOM to deliver these kind of enterprise capabilities. It is a 1-year delivery valued at $36.8 million. Establishes Palantir as a lead software integrator for U.S. SOCOM's mission command system, while expanding the technology solutions supporting SOF globally. pretty good. It says the contract award leverages Palantir's multi-vendor development ecosystem and the Ontology software development kit to expedite software deployment at the edge. And really, this edge computing is just going to become so much more dominant, even with things like IoT coming out. The expanded partnership also enables pilot projects across the broader command, inclusive of efforts dedicated to bringing Palantir's cutting-edge AI. So that's pretty, I think that's very good for Palantir. Again, I wonder if just the expansion wasn't that large. I mean, 36.8 million is fantastic, but you know, we're trading at a market cap right now of $157 billion in Palantir, which is just unbelievable. And this was dogged forever, right? I mean, you had Karp freak out on a live interview, I think like a year and a half ago or something like that. Just really barraging short sellers. Anyways, he's the one laughing now. However, we're selling off a little bit. Get some profit taking there. This moves in a little bit with Big Bear AI up 9.62% today. Okay, again, same kind of story. Beginning of this session, people were pumping. This is pretty good volume for Big Bear AI. Trading at 370 right now, still up 9.62% today for that session. You're trading at a high right there of 449. This stock is getting memed a little bit. So that's right under the high of 479. Kind of rejected that a little bit, but that's all right. The big idea is that the Economic Times of India essentially said that they could be the next Palantir. I like what Big Bear AI does. I think predictive analytics, like at the edge, is super important. I think that the biometric scanning is extremely important going forward. The revenue's been getting good. I mean, there's a lot of nice stuff with it. Low debt, good cash, right? That's all the stuff I look for in some of these big growth stocks, right? Because you need to burn cash and you don't really want to saddle yourself with debt. You're still getting a lot of inside selling. You're getting more inside selling as the stock moves up higher. And that bothers me a little bit. Now, that could be for anything, right? I mean, they could be, maybe taking a pay cut over a long period of time in lieu of getting stock options, right? So the company conserves more money. I just haven't read anything like that, so I can't really say. But that's the only thing that makes me very suspect of Big Bear, right? And of course, you have just massive run up to the upside here. Again, on decent volume, but kind of like what I was talking about with Steve, is you get so much energy moving into the top, right? You can easily get some kind of small pullback and consolidating, around a lower level, right? And I kind of wait to see for that. Tomorrow, if this just cracks down on big volume, then, this is another story and we kind of have to resituate and stuff like that. But as it stands, it doesn't seem like anything's wrong with their business model in any capacity. Their leadership seems okay, which is super important. Like, you've got to have leadership. And we're going to talk, again, as well with Qubit. I mean, these guys are not quantum scientists in any capacity, right? And this stock deserves to go down. And the more I think about it, the more I research, the more I completely believe that. But anyways, Big Bear AI, yeah, up 9.02%. I'm going to wait for some kind of pullback on it. Again, I don't know what to make of the insider selling, but what they're doing is very important. Predictive analytics is the absolute future. This is this inference kind of realm for AI, and so we'll see what happens with that. You have Pangiam Ultimate Holdings. So they sold 6.28 million shares at a 255 average price. And again, this is getting pumped on Wall Street Bets right now and other areas and Reddit. So it's something to keep in mind. We've seen what else happened with some of these other pumps. Archer, now it's important to keep in mind with things like this. I think Big Bear AI has actually more fundamental legs to stand on than something like Archer. Archer is cool, but you kind of see what happens, right? Massive run up, pump down. Now this is recovering a little bit because there was some good news from the UAE on the adoption of Archer technology, but still nothing kind of happening with that. Happened a little bit with Red Cat, although I think there's an argument to be made that Red Cat can kind of resist this level, and I think earnings should be okay for them. We'll kind of see what happens. Teal seems to be doing very well. They got rid of their old technology chief, put in some guy who's big growth-minded. It seems like they're focusing much more on military, away from kind of consumer drones, which I'm fine with because I don't think consumer drones, there's that much money in it right now. Compared to, large military building out personally deployed drones. And you get Planet Labs, again, same kind of concept. You get these massive pump ups, right, with Reddit, and they dump all the way back down. And I wonder if we're going to see something similar with BBAI in the coming week. Regardless, yeah, I don't know. Let's see what happens. Folks, stay right there. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everyone. This is Jacob Shoup. You're watching The Tom O'Brien Show. We just have a short segment going on here. GME, you're getting that tomorrow. We'll talk some more about GME tomorrow. We're going to be joined by Basil Chapman and Tim Ord as well, off 3.44% today. I don't think people are maybe buying it as much. You do get some movement up, right, from around, when did he start talking about it? I mean, you have a massive dump right here. Around December 4th, I believe he started talking about it. This is Roaring Kitty I am talking about, of course. And I don't think people are falling for it as much as they were prior. All these guys are bag holders here. It's going to have abysmal earnings. I think he's attempting to short squeeze it. But the problem is all of his, people who follow him and admire him were stuck holding the bag as well. Talking a little bit about Google, this is some really neat stuff. One of the kind of theories I have right now on next year is AI is going to run into some issues essentially, just with the limitations, like physical limitations of the chips that are used. And so I think one of the ways that we can kind of carry on this big, rally is going to be via quantum computing. You're already getting Amazon talking about bracket and stuff like that. Of course, Ionic is blowing up in a major way. And then now you have a state-of-the-art quantum chip from Google. I think this is really neat. It's called Willow. It basically reduces error, which is fantastic. More error that occurs, the more conventional you get in a quantum system, which is unfortunate. So the Willow chip is a major step on a journey that began over 10 years ago. This is Google AI, so on and so forth. Errors are the greatest challenges in quantum computing. Since qubits, the units of computation in quantum computers, have a tendency to rapidly exchange information with with their environment. Makes it difficult to protect the information needed to complete a computation. That's because you just get collapsed, essentially, right? Typically, the qubits you use, the more errors will occur, and they have figured out how to reduce this, and this could be pretty revolutionary for quantum computing. Folks, thank you so much for joining me today. We'll be on tomorrow morning, 9 a.m. with Tommy O'Brien in the morning market kickoff. Take care.